Meanwhile, U.S. stocks dipping again overnight, closing last night with the Dow down nearly 500 points, the Nasdaq down 32 points, and the S&P 500 down 42. So here's a live look at the markets right now. It was in positive territory earlier, but once again this morning down nearly 150 points. Another big inflation report, as we said, also being released today. So we'll update you on how that's affecting the markets throughout the day.
Well, they sure do, Tess. Between the tariffs, plunging stock markets, and looming government shutdown, which probably won't happen, doesn't happen much. Fears of a recession are growing across the country this week. So what do investors need to know about navigating this unstable market? It's a good question. Local financial professional Shane Stevenson from Winston & Companies is here with the latest on the markets and maybe some tips for investing. So Shane, good morning.
Good morning, Scott.
Yeah, it's kind of a crazy time right now, isn't it?
It is, and I think what we're seeing is really sort of a tariff tantrum where markets are not really sure what to think about the tariffs. How's it going to affect things here at home? How are they going to settle out in the end? Who's getting a tariff, how much, and we'll see what happens.
Yes, it seems like every day I look at the market and I read kind of a synopsis of what's going on, and almost every day investors still wary of possible recession, tariffs, are they on, they off? So
things are coming really, really quickly. Combine that with some issues in the tech sector where AI is not exactly returning the returns that were hoped from, and all these new changes happening so quickly, really creating some wariness out there.
So if you're sitting at home and you have a 401k, you're thinking about going into the market, or maybe you're retired, of course you're probably more concerned. What's the plan, you think?
Well, a couple big things to keep an eye on, first of all, right now. We want to watch CPI numbers coming out later. Make sure that inflation's not getting too out of hand. We've seen it slow down, still trickling upwards, however. So watch inflation. Those numbers can affect how the markets perform. Also, watch what happens with interest rates. We saw some drops in 2024. Not expecting a whole lot more in 2025, maybe as much as 0.75% for the entire year. Any swings in those numbers can again affect the market, so make sure you're paying attention to those things.
And one of the things that you wanted to point out is stick with your plan. You had a good line here. Time in the market is more important than trying to time the market.
That's such an important line.
You just can't time the market,
You can't time the market. And if you jump out right now and you try to time the market and say, hey, things are down, you're going to potentially lock in a loss, and then you don't know when to come back in. And if you miss those top days, which usually follow the down days, your portfolio will suffer. You'll have a pretty big hole to dig out of. So watch that. Stick to that plan.
It's not a problem if you're young and you're investing for the long term, but what if you are retired or near retirement?
You might not have time to recover from an issue that happens, and so sticking to that plan, using those averages to your advantage will really, really help.
All right, and then of course we always say diversify.
Yep, diversify. You don't want all your eggs in one basket, of course, right? We always recommend folks diversify into, of course, stocks, bonds, mutual funds, but also maybe other asset classes, real estate, annuities, or things that can help bring some hedges against inflation, against market risk, and really help give you some more broad exposure in your portfolio.
How do you invest in real estate? Are you talking about putting your money with companies that invest in different types of real estate?
You could, yeah. There's different funds out there, different trusts, or you could even just buy real estate. There's lots of different ways to go about that.
What about working with a pro? I mean, I read about stocks every day, but it's hard to understand sometimes.
It is, and they don't teach these things in school, right? So don't be afraid to ask for some professional help. An advisor can help make sure your portfolio is aligned with the investor that you are today, aligned with the current environment we live in, making sure you're not taking on too much risk, and help you really seek better returns over time. And if you think about it like this, imagine you're on a flight 3 hours away, and all of a sudden you realize you don't have enough fuel to reach that destination. That poses a problem. So we've developed our retirement flight plan process to make sure retirees can reach their destination of retirement successfully with enough fuel on board or money on board to get there. And if you want to learn a little bit more about that, you can visit winstonandcompanies.com.
We're out of time, but a real quick question, if you can answer it fast. One thing I'm always leery about is if you invest with a company or you give them your money, do they like to move your money around a lot? Therefore, they're making money every time they do that?
Well, you want to work with someone that doesn't charge for those sorts of things. So moving the money around can be a good thing if it's actively managed, but if there's fees every time, that might kind of pull back on the performance. So look for someone that doesn't charge fees for every single management move.
All right, it's a good question. Shane, thank you so much.
Thanks, Scott.
Thank you. Appreciate it.